Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson. It's great to be with you. We've got another busy week underway here. I know there's a lot going on, and we've got a very good update for you today on many issues. So we're going to kick it off with an update from the ABA. I'm going to have a discussion with one of the leading executives from the ABA talking about the rollout of the PPP program. And then we're going to get into Lisa Simpson's update related to the latest on guidance. And then we've got a firm strategy section with Carl Peterson and Dixie McCurley. Once again, you can earn CPE by clicking on 75% of the pop-ups, and you've got this toolbar at the bottom where you can download the materials and ask questions. We do ask you to take a look at some of the reference materials before you start asking questions. So with me today are Dan Martini, who's the Vice President of Congressional Relations at the ABA, and we've been working closely with Dan and Rob Nichols, who's the CEO of the ABA over the past many months. Lisa Simpson leads the firm services area, always on the town halls. Carl Peterson's going to be giving you his perspective on what's going on with the small firms. And then we've got Dixie McCurley back, and she's going to talk about how they are approaching this next phase of PPP. But let's now get into this discussion about what's going on with the lending community with the turn up of this next phase of PPP. And as I've been saying for many months, it's really this public-private partnership where you've got the governmental agencies who have put forth these business relief programs, and then you've got these key stakeholders that are executing them. And the lenders are playing a huge role. They're under a lot of pressure right now as they stand up these systems, and we're going to hear from Dan on how that's all going. Then we also have the payroll providers, and they're playing a big role here. And we know all of you are supporting your clients as they're looking to get this next phase of business relief. So let's just, before I bring Dan in, let me just take a quick look at where do things stand, where does the data stand. This was released on Sunday by the SBA, and it shows that this next phase of PPP has already issued $35 billion in approved loans. There's 400,000 loans that have been issued. And what you can take away from this is there's plenty of money left. And we have some indications that, we're probably doing a couple billion a day, and maybe by this upcoming Sunday, this will be double that, to be determined. But we're pretty confident that there is going to be enough money, and SBA and Treasury did a lot of work to make sure that they estimated it correctly. If you just look at this list here, these are the top banks. Not all of the banks have started getting their numbers into the SBA yet. Bank of America with the most loans. We've got a fintech provider, Biz2Credit, which is supporting the CPA loan portal, having the third most loans approved so far. So Dan, you and I have been talking about how this phase is quite different than what happened back in April of 2020. There's some similarities. It's very fluid. There's lots of changes in the policies, banks, firms, and clients all trying to understand it. But there are differences. So why don't you just jump in here and kind of from a high level talk a little bit about how you're seeing this phase two at the ABA.
Sure. Thanks, Eric. Really appreciate the opportunity to speak with you today to your membership. As Eric mentioned, I am a VP at American Bankers Association and tasked with being sort of the subject matter expert for the Paycheck Protection Program. In terms of what things have sort of changed from the rollout last time, I would say there's been a renewed emphasis or stronger emphasis on front-end compliance checks by the SBA. A lot of that is in response to several Inspector General reports that came out during the last 8 months or so as they reviewed the first and second rounds of the Paycheck Protection Program. So what SBA has done this time around is they have implemented some changes to hopefully root out some potential fraud, waste, and abuse on the front end. So gone are the days where if you applied for a PPP loan on a Tuesday morning, you would have funding in hand no later than, say, Wednesday afternoon. The process is going to take a little bit longer now while SBA runs some certain checks. And in fact, as part of the lender role in the process, as our membership are updating and uploading these applications into the system, into this portal, they're seeing potentially dozens of different areas that may require more documentation. So part of this process now is our membership and the other lenders that are participating in the program clearing through some of these documentation holds that SBA is imposing on the front end, and some of it it's a timing issue versus an actual problem. It's added a little bit of time between loan application submission and approval and disbursement of funds.
And Dan, just on that, I mean, I think this is, people knew that there was going to be more validation, but I think the expectations weren't fully set with the business community on how this was going to function. And even probably the SBA. The SBA, they're well intentioned on how they're setting up these different validation checks. They're doing some validation before you can even get that application into the SBA system. Mm-hmm. And then once it's in the SBA system, they're running more checks. And what we're seeing is 20 to 30% of the applications are either getting held up and getting submitted, or then they're getting into this do not approve category. And it is fluid. Just last night, the SBA started providing information on what are some of the reasons why these applications are being held up. But I think this is the businesses, as you said last time. Remember on April 3rd, Mnuchin stood up, the Secretary Mnuchin, and said we're going to get funding out, tonight or tomorrow. In this case, with these tests, it could be days, if not a week or so, or 2 weeks for some businesses to get their funding. Is that what you're seeing with the lenders?
Yes, and I don't want to put a specific time frame. I don't want to say it's going to be X number of days until you'll get your funding, because every loan application is a little bit different. But yes, there are some delays up front. I think you also have to factor in the issue that we've seen a change in administration since the program went live. The program reopened on January 11th, and 9 days later, we had a new president installed with President Biden. So his team is slowly getting installed over at SBA. As well as Treasury. You have to remember Treasury is also part of this program as well in coordinating with SBA. And it's going to take them a little bit of time to get up to speed and also to implement some of the changes that are necessary to find that appropriate balance between the efficiency of the loans getting out, but also being good stewards of taxpayer funds. And I think there were some concerns about expectations being set around that on the timing. I mean, I think everybody's, as you mentioned, former Secretary Mnuchin's comments about we're going to get money out the door tomorrow. Those are still ringing in everybody's head, as well as the experience of that first $350 billion being spent in a matter of weeks the first time around. So there is a fair amount of anxiety, but given the current amount of spend rate that's taking place each day, which is only about a couple billion, combined with the fact that there's $285 billion in funds available, I think I want to reemphasize that the money should be there, and that even though it's taking a little bit longer time, that we're pretty confident, at least from what we've seen so far, that the money should be there through the duration of this program through March 31st.
Well, let's kind of unpack a little bit more some of the issues. But I think one thing that also is kind of lead just on the comments about how quick the money's flowing, that's aiding to some of the confusion, is there are some applications that are going quickly through. Mm-hmm. So there are applications, the 70% that are going through and then getting funding. So then that's giving some signals. Hey, I got my funding. Where's your funding? And then there's not a lot of understanding about all of these error codes. So I commend the ABA. You got a letter out this week on January 25th a couple of days ago, and then the SBA. I'm not saying the SBA responded to your letter, but let's talk. I've got the next slide here highlights the key points you made. So I'll let you reflect on them, and then we can talk about what's already happening at the SBA.
Sure. Thanks, Eric. And I think given our membership's role in the process in this public-private partnership, more often we're likely to see issues as they come up, and we have the benefit of seeing issues from across the country. So during the first couple of weeks of this program's operation, there were a couple key buckets of issues that kept arising, and with enough frequency to the point where we felt it was good to send a letter sort of as an early warning sign and early warning flare to the Biden administration that these are some issues that, if left unaddressed, could really systemically hamper the efficiency of this program. So the first bucket would just be the general lack of transparency, sort of why applications weren't being approved, why they were being delayed. There were issues around being able to apply for a second draw if you had a first draw under forgiveness. There was a lack of guidance in that area. The second bucket, I would say, were more technical data processing errors. And as we've seen in the last 48 hours since we sent our letter, 72 hours now, SBA has held some lender-specific presentations. They've provided documents to a lot of our members about what these borrower code error issues might be and how to resolve them. I think the focus there being they gave us a way to resolve these issues. So hopefully those get cleared up. That sort of 20 to 30% bucket you've mentioned so far, hopefully they're continuing to be processed in the next few days. And then finally, one of the sort of big issues, particularly for those lenders that had started preemptively collecting applications, has to do with the 25% revenue reduction proof that is needed for the second draw. The documents, not to get too into the weeds, but it required the FAQs released on Tuesday last Tuesday required a signature, whereas all of the documentation that was collected and added into the applications prior to that Tuesday, borrowers were just providing proof, but not necessarily signing quarterly financial statements. So we had asked for a specific fix in that instance because it would hopefully save hundreds of hours of work, both for our members and for your members as well, that are helping get these applications ready. And then I see the last bucket there, just broader eligibility issues. Anytime there is a new IFR that's released, you're going to see potentially some certain circumstances where maybe a certain group of borrowers aren't envisioned or included for their very specific example of whether they're eligible. So just to the extent SBA can continue to provide guidance there, either through frequently asked questions, interim final rules, or via the local SBA district and regional offices, I think those will help go a long way in making sure that those borrowers that are eligible can and will receive PPP funds.
Well, that's a great summary. And those letters, I'm not sure if we posted in the resource center, but we will get those out to the attendees definitely in the follow-up email. So I think we've covered most of these items just in our discussions. In this word portal errors, errors, that's just kind of where maybe in this nomenclature matters. But errors really means that they're saying there's something there that they're concerned about and they want to have a check-in. So that's what we're gonna start learning. There's these error codes. I mean, there's 48. There's all these different error codes that we're now going to are indicators that we're going to have to work. The businesses are going to have to work with their lenders and with their CPA firms and getting corrected. Is there anything else that you want to highlight that we haven't discussed already, Dan? Here.
Yeah, I would also highlight that there are some caps that are currently in place in the portal. I believe it's $35,000 per employee is a cap. And then in some instances, we are seeing some rejections around 5 million maximum loan size combined across first and second draw. We're not sure why those limits are in place, just that they exist. So what we have urged SBA on both of those is to provide justification, because we haven't seen either of those appear in any sort of interim final rules or guidance. So just let us know why they're there. And then also, if they can provide upfront notice on a lot of these issues, that would save a lot of time and effort. Because if you, as a lender and as a CPA, know what the rules are going in, you can counsel the borrower as to what they can actually apply for, and that should hopefully streamline the process on the front end before the application even gets put into SBA's system or attempted to put into the system, and then gets kicked back due to one of these unresolved borrower codes or these portal errors.
Yeah, so there's a lot of intensity right now in the system here, and here's all the steps in the process. We're not going to clear this workflow slide, but this is what the businesses are going through. They've got to get the application into the lender. The lender sometimes might have some questions. The lender portal might have some issues. Then that lender gets it to the SBA. We just talked about how the SBA may not accept it. Then the SBA reviews it. 20 to 30% are being put in this not approved by SBA. The lender's got to get that information, get it back to the client, get it corrected. Then you get the E-Tran number. And then there's some anxiety here. Once you have the E-Tran number, the SBA is still asking for additional documents at times. And it really, the lender, after they get all those documents in, then they have 10 days to provide the funding. So yeah, we don't want to predict. Sometimes it's going to be a short amount of time. Sometimes it's going to take over. We're seeing already over a week. And I think the key thing here is patience, and just knowing that there is enough money. So I appreciate you have been very active with the AICPA and trying to drive the ABA drive this common approach. So we appreciate your partnership here. There's 5,700 lenders out there. Our understanding is 4,500 lenders are already processing PPP2 loans. There are different policies out there. We try to drive some type of consistency. So Andy, I'll just give you some final concluding remarks, and then we're going to get into Lisa Simpson's technical overview.
Thank you very much, Eric. I really appreciate the opportunity to speak with you today. I think this is a very important conversation to have now, particularly as we've got about 9 weeks remaining in the current application period for first and second draw Paycheck Protection Program loans. I just want to reiterate the great work that I think our membership and your membership have done together over the last 10 months through rounds 1 and 2 and now round 3 of PPP. For those individuals that are getting some anxious customers and anxious borrowers, I would just reiterate the patience aspect of this process. I'm hopeful that things get better as the weeks move on here, and particularly now that it seems like SBA is providing more transparency, more clarity. We hope that process continues, and we look forward to working with you all to get the borrowers their much needed money to keep the businesses open, keep the lights on, and weather this pandemic. So thanks very much, Eric.
Well, hey, thanks, Dan. It's a great closing summary. We'll be in touch and look forward to having you on again sometime soon. Thanks, Dan.
Thank you.
So with that, I'm going to bring Lisa Simpson up, and Lisa, let's get right into it.
Thanks, Eric. Great to be back. And most of you have been with us for several weeks, but if you're brand new to our town hall, welcome. I'll start with some preliminary reminders for you. Included in your materials for you to download are a couple of really important documents that I'll keep referring you back to. I've already started doing that with some of the questions in the Q&A. So first of all, what we've done is we've compiled a list of the most relevant SBA and Treasury guidance pertaining to borrowers. It's got your IFRs, it's got your FAQs, links to the new forms, and some bullet points in there to help you figure out where the right answer might be. But on the next slide, I'll point you to the summary that we've been working on and building out over the last couple of weeks. So that's going to answer most of the common questions that we're actually getting right now in the Q&A. So please take a look. On the next slide, I've got the table of contents for you. And I've highlighted some of the new areas that we've built out since the last iteration of the summary document. So based on the feedback from the last town hall, we've given you some extra bullet points around how the forgiveness process is going to work for first draw and second draw loans. Lots of questions around the FTE reduction comparison period. So we've talked about that in the 2 materials that are in your downloads. We've also fleshed out a little bit more around the simplified forgiveness for those loans under 150,000 so that you've got some additional guidance there. But we've got a broad range of topics that we're covering in that summary document. So I will ask you to take a look at that to see if your question is answered in that document. All right. We've had a week where there were no new IFRs, no new FAQs, no new forms. So what I thought I'd do is take a step back and look at some of the top questions that we got last week. Again, if you're new to our town hall, you are welcome to check out all of the archived versions on AICPA TV. There will be a link in some of the documents that you have, but you can also just go to our AISBA.org, AICPA.org. I feel like I'm working for the SBA, AICPA.org/SBA page, and you'll find a link to last week's town hall. So take a look at that if you weren't able to join us last week. All right, let's dive into some of the questions. Eric, if I can go back for just a second. So one of the big questions that we're getting is around the beautiful problem caused by PPP expenses being deductible on the tax returns now at the federal level, and the basis issues that can create for pass-through entities like S corps and partnerships. So there are lots of questions coming through on both the impact on basis, the timing of when to recognize forgiveness on the tax return, how the income is going to flow through, what does that look like, does it show up on the M1? So I've given you a link to a Journal of Accountancy article that we published back in December. The issues are outlined there. Ultimately, we're going to need some guidance from the IRS, but right now we do have a group analyzing the issues, and we'll keep advocating to get guidance from the IRS on those topics. Another one of the biggest questions that we're getting is around calculating the 25% decline in gross receipts and whether or not other CARES funds, such as provider relief or targeted higher education funds, are included in gross receipts in calculating that 25% decline. We have asked the Treasury for clarification on that, and as of yet, unfortunately, we do not have an answer. So I know that probably knocks out about half of the questions in the Q&A, but we are actively trying to get an answer on that. All right, another big question, Eric, if we can go back for a second, is around borrowing for a second draw if the first draw wasn't fully used. And what if the borrower used all the money but isn't going to qualify for 100% forgiveness? So I've given you a link to the interim final rule, which is going to be your authoritative guidance on the topic. But basically, in a shorthand approach, before the second draw is actually dispersed, the borrower has to certify that it has used the full loan amount of the first draw only for eligible expenses. It does not mean that they had to get 100% forgiveness. It does not mean that they have to have applied for forgiveness. Now, the caveat there is that some borrowers or some lenders are setting their own rules and saying that in order to apply for a second draw, the borrower has to submit that first draw forgiveness application. That is not in the SBA guidance, but we are hearing that some lenders are asking for that. Again, in looking at the amount of the spend, I saw a question come in. We had an 8-week covered period, and we spent most of the money on payroll in that 8 weeks, but then we spent the rest of the money after the end of the covered period. Can we qualify for a second draw? And the answer is yes, if it's only been spent on eligible expenses. So hopefully that clears up the other half of the questions. But there are more. Lots of questions. Sorry, Eric, I'm giving you mixed signals on the slides. There are lots of questions coming in about economic necessity. So we'll flip to the next slide.
And Lisa, just one thing on that about the lenders. Some lenders are requiring the forgiveness, but there's also this issue where a lot of applications are being put into this denial or hold pattern if there's some type of review being done on that forgiveness application. So there's a lot of confusion out there that still needs to get cleared up.
Absolutely. And a lot of people are looking for a very clear definition of this self-assessment of need around the economic uncertainty that needs to be present when a borrower signs off on their application for a PPP loan, whether it's their first draw or the second draw. There are no definitive hard and fast rules. That is an attestation that the borrower will make. And we know, we've been talking about this since last April, we know that the information will be released. They'll release the names of the borrowers and the loan amount. So it's something that the borrower is going to need to assess as to whether or not they feel like this current economic conditions make this loan necessary. We fully understand that these loans are going to be scrutinized. So we cannot give you the right answer. If you're working with a client who doesn't know if they've got a full economic uncertainty, then ask them to document their situation at this time, what their cash flows look like, what their uncertainties are, and then their frame of mind at the time that they apply for the loan. Carl Peterson and I have been talking a little bit about this. He's been talking with some small firms, and I know he's got some thoughts to share on that. So Carl, if you can join us, let us know what you're hearing out in the field from those small firms.
Past few weeks, they ask about this issue all the time, right? Many of their clients have a quarter that meets that drop in gross receipts requirement for a second draw, probably in Q2. But then the end of the year, where overall they were in a pretty good position. So what the clients are saying is that while last year ended up okay, we still do have uncertainty about going into this year. Many states are still in lockdown. Most have no idea how PPP is going to impact their state tax as the states may or may not conform to federal, and business is changing. So there's a lot of uncertainty. And like you said, when firms ask me about this, it really all comes back to making sure that your client has good documentation of their concerns about their economic future. And then they have to decide whether or not the client can sign off on the application certifying that position of uncertainty.
One thing I can tell you, there's a lot of draw ones coming in, as well. That's in this a lot of smaller application draw ones this time around, and as well as the draw two, and both have this self-assessment of need, economic uncertainty requirement.
Absolutely.
Yeah, that's right. And so the suggestion and recommendation is the same: document.
Carl, I'm going to ask you to stay because we've got another hot topic to talk about, the employee retention credit. And a lot of questions coming in about ERC and where are we? What's the guidance on PPP borrowers who are now eligible for ERC? How are they supposed to stack those wages? And so what we've given you on the slide here is a link to an AICPA letter that was submitted to Treasury and IRS, asking for a common sense approach to allowing borrowers to utilize those wages that they may have already reported on a forgiveness application that they didn't need for full forgiveness. So we've advocated for clarity and simplicity. What we've gotten so far from the IRS is a very narrow scoped document that only applies to PPP borrowers who maybe didn't qualify for full forgiveness. And it lets them know how to apply for ERC on their fourth quarter 941 if they choose. In the meantime, while we're waiting for additional guidance, we wanted to give you the link to the IRS FAQs that apply to the 2020 credit scheme, but they are supposed to be updating for 2021. The last I checked, that hadn't been done yet. We have a lot of questions coming into the chat about just simply how does ERC work? And we have a webcast that will cover that in depth that I've given you a link to, and we've got an additional slide at the end to make that easy for you to register. So Carl, ERC, PPP, all kinds of fun conversations.
Actually, I'm going to, if you don't mind, I'm going to defer that because I have some comments specifically about that I plan to share during my slide on small firms and best practices. So,
well, that'll keep you guys in your seats. Thanks, Carl. We'll get you back a little bit later then. So I'm going to switch to some other provisions in the Economic Aid Act that have come into play in previous iterations of business relief. We have targeted idle advances that were funded in the latest legislation. But again, the key word here is targeted. It provides businesses that are located in low-income communities with advances of up to $10,000. This is definitely a different twist than what we had under the CARES Act. So it is only for applicants who previously received an idle advance that got less than $10,000, or they applied but the money had run out for the program. The people that are eligible for this targeted advance do not need to take any action at the time. The SBA will go through their records and reach back out to those who qualify for this. So the idle advances that we knew under the CARES Fund, where you automatically got $1,000 per employee up to $10,000, that is not what this program is. I've given you a hyperlink there in the slide so that you can investigate that. We've talked in a previous session about the idle advance no longer being subtracted from PPP forgiveness. According to the SBA, there is nothing for the borrower to be done or to do that will be handled by the SBA, even if the loan has been forgiven. So I know we've gotten some questions around that as well. We've also got a new business relief option within the Act called the Shuttered Venues Operators Grant. And the SBA site has a lot of information about the program, but there's an important caveat in that the program is not yet accepting applications. It's going to have a priority application program so that the higher the loss of revenue, the higher you are in the priority list to apply for the grants. So on the next slide, I've given you a few bullets on who is eligible for that grant. But two key factors: you must have been on operation as of February 29th, 2020. So again, these programs are designed for entities who were in operation prior to the pandemic. And you must not have gotten a PPP loan in this next phase of PPP. So again, there are still a lot of unknowns about this. The program is not up and running, but you might want to grab that hyperlink and bookmark it if this is something that you feel will be helpful for your organization or for your clients. Okay, lots of questions because it's the end of the year around how to classify PPP loans on the balance sheet. As a reminder, we've had a lot of great conversations with Dan Knoll, who is our Senior Director of Accounting and Standards. I've given you a link to his session on our December 10th town hall where he talks about how to do the accounting. But in terms of actually it's year end and now I need to know what to do with classifying that loan as short-term or long-term, we've got some things to think about for the most, one of the most commonly used models in accounting for PPP loans. So again, like so many of the issues that we deal with in PPP, your judgment is going to be needed. But if you believe that the entity is going to seek forgiveness, then look at whether or not you think they're going to qualify forgiveness, and then you may have an argument to classify it as current. But again, use your judgment and refer back to Dan's conversations on our town hall.
At least I'm understanding some of these links are not working in this presentation. I think as you're all seeing that we're putting a lot of effort into our town hall emails. One of the things we do is we put the top questions in a town hall follow-up email. What we'll do also is put a link to a PDF and we'll make sure all the links are clickable. So back to you, Lisa.
Thanks, Eric. Okay, here's a great resource, compliments of our friends in the tax practice section and the tax advocacy section, because not all states are following the federal treatment that PPP expenses are deductible and there's no income from the forgiveness of the debt. They have created a state tax treatment chart for your reference. I hear the cheers coming up from the audience right now. You can find this at the AICPA's COVID-19 Tax Resource Hub. So we'll get you that link in the follow-up email. One last reminder, I'm going to zig a little bit, but our friends at the AICPA Member Insurance Program have a special edition as we're entering into audit season that is focusing on some audit issues that I wanted to call to your attention. A great risk summary report that you'll find some good tips on auditing during a pandemic and other key topics. So lots of good stuff there.
Well, Lisa, that was quite a review. Again, a lot of information. One thing I was just told that the links work if you download the file. It's just that people are actually trying to click on the links as you were reviewing it just now. So a lot of information that's needed. So Lisa, let's continue and let's bring Carl's Corner, one of the highlights of the town hall. So Carl, you've been busy. You're busy this week. You're busy every week, but I know there's a lot of feedback coming into you from all the small firms.
Yeah, no, I appreciate it. Thanks, Eric. And I'll tell you, and I know Lisa knows this, that typically firms are excited at the beginning of the tax season. They're ready to get going, finalizing year ends for clients and ready for the tax season. And then, of course, by March, everyone is tired of it, right? But this year, I've actually met with over 100 firms just in the past 2 weeks. That excitement, the positivity around getting through the season is already gone. I'm not sure that it actually even existed this year. There was really never a time to catch up from last year. And with all that happened last year, PPP, the EIDL grants, extended tax season, extending peer review for some firms, and now with PPP2, second draws, first draws, it's all this layering of work and deadlines, right? PPP is through March 31st. Payroll reports are due in a few days, 1099s, then business tax returns, layer upon layer of work, deadlines, and expectations. I know it's tax season, but lay on top of that, we still have to deal with loan forgiveness from the first round of PPP. Lay on top of that, we have PPP2 and ERC and shuttered venue grants. And clients are really just trying to survive. Clients are very anxious about the future. I think the best thing for firms to do right now is just to breathe, be intentional, create and follow processes, manage client expectations, which means you really have to set the client expectations and with increased communication, probably over and over again. Stick to your plan of action to deal with PPP, ERC, the tax season, and everything else that's on your plate. You cannot control everything. You certainly have no control over the PPP lenders and no control over the SBA, so control what you can. And, we talk about the great opportunity to get the ERC credit going back into 2020. As I meet with firms around the country, what some are doing, and maybe one of the best things to do is analyze the 2020 ERC after tax season. Right now, the due dates are not changing. Your clients should still be able to get the credit later. Why put that pressure on yourself and your staff to do it right now? I think we put that pressure on ourselves, that it must be done with the fourth quarter payroll reporting that is due in a few days. And you can always amend the payroll reports. Give yourself the time to do it right and accurately. Your risk of professional liability goes way up when you're under stress and trying to push things through without the time to review your own work. And then for 2021, the ERC is even more valuable. I know clients want to apply for round 2 of PPP. So what is the best practice? It might be different for your firm or even for each client. Maybe it is best to wait and file for PPP later in the quarter so that the covered period does not start right away and more first quarter payroll is available for the ERC. There is an opportunity to maximize the relief for your clients. There is certainly a timing risk. So you would want to make sure you do the PPP application early enough to ensure you can work through any change of issues and being in that potential do not approve category, but be patient, do it right, and do what is best for your client. And then for those clients who cannot wait, go ahead, help them apply for a PPP loan. Once they receive the funds, help them manage it and track the use as it relates to payroll. And you can manage that and maximize the payroll for ERC and manage the payroll funded by PPP to be able to meet the 60% requirement for loan forgiveness. I know if I were in practice today, I would consider talking with all my business clients saying, you know what, let's analyze and focus on ERC and PPP to make sure that we maximize the two opportunities. But to be able to give it the attention that it really needs to do the right thing, we're going to have to extend your tax returns and deal with them later after tax season. That will take off some of the pressure that you and your firm staff are under right now to do it all. And there's really not enough time in the day to get it all done. So Eric and Lisa, the common theme really through all these thoughts, I think, is patience, slow down, do it right, manage client expectations, and of course, be sure to have an engagement letter.
Yeah, that's great, Carl. So, I mean, I'm seeing the questions come in. People are really appreciating your empathy and your advice. And I think on some of these things, it's to look at the different stakeholders, and even I'm some points coming in that banks are not being responsive. The banks, some of them have stood up thousands of workers, and it's overwhelming. And they got they got the 48 codes last night. And so it's SBA's handed the baton to the lending platforms to execute this, but they've only given them 60-70% of the answers. That's a hard spot to be in. So just you say continuing to call the lender and say and to get an answer that they can't give. They're going to get those answers. So it's unfortunate that some of these borrowers have been put into that 30% class that says you're not approved, and that's frustrating. But then again, there is enough money. You are going to work through it, and it's almost like a tax return. And sometimes some people get their returns, their returns faster than others, and that's what we're almost experiencing here, Carl. Right?
Oh, absolutely. I mean, you have to control what you can control. And again, the SBA is out of your control. The lenders are out of control. Those error codes, until you understand what the error code is, and the bank comes back to you, you can't control it. And so we can spend so much time and anxiety, dealing with things we can't control.
Right. And I think it's just have a process where, and this is where we're going to bring, is this you? We're going to bring Dixie up here right now. We're bringing Dixie up. So let's we almost like an open forum here. And Dixie, this is even better, just as good as Carl's Corner. I shouldn't say better than Carl's Corner. So, hey, Dixie, why don't you just jump in here and offer some of your perspective, which is always so well received.
Yeah, well, I cannot compete with Carl because I wanted to write down everything that he said. So thank you for that, Carl. With us, I wanted to start with just the past, where we were with PPP, the first draw last year. It was totally new. It was a new pandemic. We went through a lot of trial and error on what we were doing, and we put together that process that now has made it a lot better for us for PPP2 or the second draw. We expected it to be a lot better. But we've been working over the last couple of weekends. We've been working late at night, early in the morning. And so it has just been really exhausting to keep up with all the changes. One thing that we've been able to do really well is, like Carl said, is communicate. And we've been doing an over communication with clients. Our firm has been an early adopter for over 10 years. And so we adopted this business relief funding advisory program and have been setting up all the processes to be able to do it with some stops and starts. And so in terms of like our level of exhaustion, we don't even file tax returns. Like our firm doesn't do taxes. So we're not in tax season right now. But dealing with this PPP reminds me of those years when I was in tax season. So, those all-nighters, the communication with the client, trying to get it in. So I think you're right, Carl, to slow down and document. When we did it the first time, we didn't have great tools set up. We were doing a lot of things manually. This time we were way more prepared for it. And being a part of the CPA.com business lending portal has been really good for us in terms of having a consistent tool. And so not being scattered across 25 different banks or, more than that, but going through one process with all of our clients, we've now been able to communicate to them where they are in our queue to help get all of their documentation in and then give new feedback back. So, a big thanks to all of you for doing this town hall and doing videos and walking firms through it. We're having to do the same thing with our clients. So in the future, where we see this going is that we've got to create social communities amongst our clients. You've got to get the same message out to all of them about where we are, what's going on, and educate them. They also want to be educated, even though they may not want to handle it themselves. So I know a lot of firms have struggled with, should we help clients with this? So we've been helping other firms, clients through this because we've put together a team to be able to do it. So you've got to create capacity for these new things. And for us, the most important thing is in the future. You know, we've always helped clients with SBA loans, and it's always been a nightmare really for all of them going through it. So we see this as an area that we can give a better advisory on how to get the new, maybe there's going to be a third round that comes out. Maybe there'll be microloans that come out and other programs specific to those industries that are still maybe hit by this. That's what we're hoping in the future, is that the lifetime value of our client, these are the moments where they're never going to leave our firm because of what we did during this. So that's been our approach. It hasn't been easy. We've had to use our best judgment. You know, we have access to all of their financials. We have access to all of their payroll. We know how to do the calculations and make sure to help maximize them. And so those are all the reasons why we're participating in this, and we think the value back to our clients for sure.
Dixie, how are you managing if if a client, right? So you're trying to process some applications, but if a client gets into one of these spots where there's an error code, and then I also just make that I'm gonna give you two questions. And the second question is, I know you've been on some task force meetings with me where some firms are just saying, we're just waiting. We know that there's going to be enough money, and we're waiting for the SBA, the lenders, and everybody to get these things sorted out. But the first one is for one of those clients that said, I don't want to wait, and now I'm not in that approval stage.
Well, it's taken a lot of communication. We have started doing 10 a.m. communications out, even if nothing's changed, and then 4 p.m. at night. And so we're still getting questions from the clients. And so over communication on where we are in the process, we've had to tell our clients that, we don't even have the capacity to be able to process more than 4 of them a day. So they're going to have to wait through that. So, just over communicating to them has been the area that we've had to do the most of.
Right. And and some things you're not stating you'll get that resolved in 24 hours because you don't, it might not be 24 hours for you to get that resolved.
Well, we took the approach of telling our clients that we know that they are early adopters. All of our clients are on the cloud. They're very sophisticated, usually with technology. And so because they're early adopters, we're going to be doing the best we can to get them, their maximum amount as quickly as we can, and things will change. So that's the one thing we learned in the first round of PPP, is that what we know today is going to be different tomorrow. And we've already had that on 5 different days, 5 different occasions. And so they all understand that this time. They either went with their bank or went with us. And so they went through the same thing with their bank. And that's what we've been great about, is over communicating with them all that you're sharing with us from Treasury and SBA, and continuing to communicate that through the firms into the clients.
So how would the wait, Carl, the wait strategy, talk a little bit about just wait the ERC and just saying, you've got do it in early February, mid-February.
You know what, I'll tell you what, I think waiting to where you have that comfort level, it gets closer to the, to the middle of March, end of February, maybe you're getting close to the middle of March, might be the right strategy. So, your client has not been spending the new PPP draw on current payroll, and you're going to maximize your ERC that is based on payroll through the first 2 quarters of this year. And you'll still have those 24-week covered period to pay for that payroll. But I just want to make a quick comment. Dixie is really, listening to her, you have really managed clients' expectations, which must make your life so much easier.
It does make it a little easier, but there are still clients that still want to know now, because a lot of our businesses are struggling and they really need the funds. So, waiting 48 hours for something and then having to wait 4 days and actually expecting that maybe they'll get it, that's been the hardest thing, is that, cash is king with these businesses and our clients right now. And we do want to get them the funds as soon as possible for those that have been the hardest hit.
So there probably is a balance between, those clients that really feel they need to have that PPP funding versus balancing that with making sure you're maximizing the opportunity with the ERC credit in 2021, which is so much significantly higher than the credit was for 2020. So.
Right. You know, we are saying to set up a separate bank account, put the PPP second draw funds into that, and look at and analyze the ERC after that. But for those that need it immediately, we're going ahead and processing those and still trying to do as much as we can on identifying, you know, how to maximize both.
Yeah.
Okay. Lisa, do you have any questions as we move to the net? We're going to go to open forum. We'll take some questions from the attendees. We got a lot. We've got over 8,000 out there, so a lot of questions coming in. And I guess we've got this. We do have one more slide here. Carl, Lisa, Dixie, you guys all know this well. So what to minimize issues, and the only thing I'll say is the step 4 here, which I am aware of. This is double check these documents before. Ask your client to double check these documents before they sign off on them, because some of the SBA error codes has caused some of the lenders to have some of those final loan documents not reflect the correct PPP application amount.
To a certain extent, Eric, this is the process, the minimum process you need to have. Each one of these things, in my mind, is going to relieve some anxiety. You have an engagement, great. You're setting expectations, great. Document, and then double check the documents with the client. So it'll be good.
One other thing, so we've got so much information that we want to cover here on the town halls, and there's also information that we want to cover on the CPA loan portal. Right now, during this intense time, we're just setting up calls on a bi-weekly basis. We had one today from 10 to 11. It was recorded, and every Tuesday and Thursday from 10 to 11, we're just going to talk about the portal and the latest with SBA related to PPP. Town halls are about a lot of different things. We are covering some of that in the town hall, but we're going to be doing a deep dive twice a week at 10 a.m. and you can click there to attend. And it'll be specifically related to the CPA loan portal and just kind of supporting all of you who are leveraging that and making sure we're getting the information to you as fast as possible. And there's a lot of improvements being made. And it's the analogy we used before, building a plane while you're flying. It's very true. It's very true. The lending community are the final mile here with you in getting this business relief in place. So I think that's something just to continue to keep in perspective as you work through these issues with the clients. Everyone's working hard. So Lisa, I've seen a lot of questions coming in on ERC. So that's one. I know we've got some tax topics next week, but do you want to maybe expand a little bit more on ERC and kind of how we're thinking about that?
Eric, we're not supposed to play Stump the Chump. There are so many questions around ERC, and we just don't have all the answers. So that's why if you've asked a question about ERC and you're saying, why won't you answer me? It's because we need guidance from the IRS in terms of how to navigate the interplay between ERC and PPP. There are some other ERC questions that we're trying to get some common understanding around. So a lot of the questions are around, is a spouse of a 50% owner of an S Corp eligible for an ERC? Trying to get some consistency in our understanding of the answer to that. So we don't want to steer you wrong. And we'll keep working on trying to get some of those answers. I'm seeing a lot of questions around forgiveness applications and where are they? Why are forgiveness applications not moving? Are any of the $2 million and above loans making it through the final SBA process? And what we're hearing is that the forgiveness process has slowed down dramatically, especially for those loans of $2 million and above. We're not hearing of a lot of movement. I'm not getting a lot of files cleared out. So you're not alone if you've applied and it's been more than 90 days, even regardless of the loan amount. So some of those smaller loans are still in a holding pattern in terms of getting that final forgiveness from the SBA.
Yeah, and Lisa, on that, we've heard from the lenders that a lot of them are are putting that on hold right now. They're at, just like, you heard Carl talking about the layering. So the lenders are layering here, and right now they're focused. They put all of their team on supporting the reopening of PPP. So it's hard to do reopening PPP with the flooding of questions that they're getting, and wanting to do the best they can and respond to those and do forgiveness. So we even heard from one of the national banks that they're just selectively doing forgiveness applications at this time. Other questions that we received: can you do corrections on the first phase of PPP? Same thing. That guidance came out January 25th, but that's not at the top of priority for lenders to figure out how to do those corrections. So I think that's something you're going to see, in February, and it's just reality. It's just reality related to how much the lending community can stand up to support this next phase of business relief.
That's great point, Eric.
Well, we've got our final resources here, but before we get to that, Dixie, any final remarks, comments, just perspective to offer to the attendees?
No, I mean, there's a lot of fatigue out there. We're all going through it. And I think our clients are going to really appreciate the help that we've offered from a CPA firm perspective.
Yeah, and it does feel, in April, everybody it was the beginning of the pandemic, the economic first responders were the firms, and now we're 9-10 months into it. So it's hard. And I think everybody is a little bit more fatigued. Carl, and that's one of the points you made. So what kind of you've had a lot of good comments here today. How can some final words of wisdom to listen to people up?
It's easy for me to say to be patient, but really now's the time to say, okay, here's what we're going to do. Here's how we're going to get there. Set the client expectations and manage, starting today, what you're going to do through the rest of the season.
Okay, Lisa. So we'll just go through the final resources here. So back up there on the slides here. I'm going backwards. That's not good. We got to go forwards. So Lisa, anything you want to highlight on the past town halls?
Again, lots of questions about topics that we covered in the 14th and 21st town halls. So just take a few minutes to watch those replays if you're asking about some of the fundamental issues from the latest guidance. Our resources are constantly being updated. We have focused for the past month on our loan amount calculators. So if you're looking for an updated loan forgiveness calculator, then that'll be available on the site by Monday. But we wanted to make sure that we were working on loan amount calculators once the window opened. Our FAQs will be live next week as well. We took those down to do a lot of editing, but again, most of the answers are going to be in that summary document that you have available to you.
And just on other resources, I know there's questions coming on the CPA loan portal. We have those twice a week, 1 hour updates, and then practically every night we're sending an update out to users with latest information. Sometimes it includes things from the SBA. Sometimes it's just related to the functioning of the platform. Here's another opportunity here to learn more about ERC. So that wasn't Lisa, you can't be stumped earlier. So anyway, but this is it's going to be a 90-minute session coming up on February 5th related to ERC, and you can register by clicking on that link. We now have the town halls available via podcast and on the AICPA TV, and you can forward this to anyone. And we are receiving a couple thousand downloads post of the live town hall session. We continue to stay engaged on social media. There's a lot of things happening. So we're just highlighting some of the more recent posts. And if something does break, we get that out to the AICPA, CPA.com channels, mine and Lisa's channel. So we will be back with you again. We've been with you every week, Lisa. It's been every week. It's tomorrow. Today's the 28th. Wow, 4 weeks in to 2021. We've been going hard. We appreciate your time. We appreciate your questions. and we take all those questions back in, and it helps guide our FAQs and what we're doing in the next week's program. We also appreciate your feedback. So thanks for your time, and look forward to seeing you next week, February 4th at 3 p.m. So thanks, Lisa.
Thank you.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.